Hey everyone, Scott Kuru here with your daily property update here from Freedom HQ in Sydney. Now guys, there have been 6 straight months of price growth in all the capital cities all around Australia. So I'm going to talk about the growth rates for each capital city. I'm also going to talk about what's driving this price growth and where this price growth is going to head. And then I'm going to reveal to you the areas where I've got my attention and where I'm actually putting my own money in terms of my property investments over the next 6 to 12 months. Now, if you want to stay on top of the property market, become a property insider and invest like the full-time property experts, hit the subscribe button and stay in touch and in tune with my daily property updates. Now, according to the latest property data, check out this chart. There have been 6 straight months of property price growth here in Australia. Now, in just July alone, the median house price across Australia has jumped 0.6%. If you annualize that, that's like 6 to 7% growth over the entire year. So let's go over the numbers now and talk about where this growth is actually coming from. Sydney is actually up 0.6% in the last month. Median house prices have actually jumped up to 1.23 million. Now that's the median house price for all apartments, townhouses, and houses combined, but standalone homes are now above 1.7 million median house price. Melbourne actually jumped 0.4% for the month, and we're going to see continued price growth in Melbourne. This is the most undervalued market in all of Australia. In fact, the differential from Sydney to Melbourne, the price difference, is at an all-time high, with the difference being about 60 to 70%. This is not sustainable for Melbourne. Melbourne will rebound and it will bounce back. Brisbane actually jumped 0.7%. That's a big jump. Perth grew by even more, almost 1% growth in just 30 days. Darwin is up 2.2%, but again, as I always say, I will never invest in Darwin. You will never find me buying property there. The combined capital cities altogether are up 0.6%. Now, for almost 1 year, regional areas have been growing more than capital cities, but you got to remember, a lot of these so-called regional areas now, like Geelong, Gold Coast, Newcastle, and different areas like that, they're kind of not regional anymore because of the population growth experienced in these areas. But these areas now are actually not growing as fast as the combined capitals. So all the action is coming back to the capital cities. So there are 4 factors that are continuing to put upward pressure on property prices. Number 1, shortage of supply. There's simply not enough supply on the market. Total listings are actually 19% down when we look at the average over the last 5 years. This is a significant fall in supply. We also have interest rates falling and a lot of news that interest rates will continue to fall, possibly 2, 3, or even 4 rate drops in the next 12 to 18 months. Demand is steady with annual sales up almost 2% versus previous year. Confidence is coming back to the market and investors and first-time buyers are expecting house prices to grow, especially with lower interest rates here now and also more to come on the horizon. So prices are continuing to grind their way up. They're not out of control, they're not booming, but they are slowly notching their way up because of these price pressures. Now, I want you to take a look at this interesting stat. This is the delta or the difference in price between standalone houses and apartments. And as you can see, that gap now is at a historical high, meaning that there will be further price growth in apartments. Now let's talk about rents. Rents are accelerating. Just in the past 3 months alone, nationally, rents are up above 1%. Units are actually up 1.3%, standalone houses up 1.1%. Take a look at this chart. This is the different areas and the rent increases. And as you can see, Darwin and Hobart experienced the biggest increases. Rents are out of control. Renters in some states are actually spending 1/3 of their income on their rent. Not sustainable. For many lower income families, 50 to 60% of their income is being spent on rent. A lot of the big research teams, a lot of the big research companies are forecasting further price growth, mainly because of interest rates continuing to fall over the next 12 to 18 months. Affordability is tight. Loan serviceability rules are actually still intact and debt levels are high. So if you're a buyer and you're waiting for prices to fall, this is not going to happen. Prices will not retreat. Full stop. For investors, rent growth is growing. Vacancy rates are low. The chances of you experiencing any losses in terms of your rent are extremely low. It's a very good time to invest, especially in the sub $1 million market. All the haters out there for Perth were wrong. I know a lot of the experts came out and said 6 months, 12 months ago, to stop investing into Perth. Worst advice ever. Brisbane and Adelaide are still continuing to grow. Melbourne growth is slower, but most of the upside growth in the next 3 to 5 years will be in Melbourne. Love to hear your thoughts on the market. Please drop a comment. Let me know what you think. And guys, if you want to have information like a property insider, know what's happening across the economy and the property market, make smart investments, please like and subscribe to get your daily property update. Thanks, everyone.